Hello traders, Gary Wagner here, just after 10:30 in Honolulu, 4:30 in New York, July 14th, it's Thursday, and this is the daily report for gold and silver. After seeing a pretty nice rise yesterday, about a $10 rise, that of course following a pretty brutal sell-off, we have the market giving back about 80% of gains yesterday. As you can see, we're currently trading off about $8-9 on the day, 1333.51. That, of course, is spot gold. And when we look at the high, 1347, low 1320. We can switch that over to COMEX gold. COMEX gold at 1333.90, down about 970. Net changes pretty much the same on the day. Of course, yesterday we had the initial setup. Everything was set for an actual buy trigger in the market. We didn't get confirmation, and we didn't issue the buy signal. In other words, we didn't get all of the criteria needed, which meant that according to our forecasting system, the market could still succumb under pressure, which in fact it did. Let's take a look at our first gold chart, and I'll explain in more detail. So traders, absolutely no doubt, gold under significant pressure today. It actually did break through what we've identified is a 38% retracement. Of course, that's a retracement from these lows at 1254 up to these highs at 1378, this last rally. We plotted, of course, the 38% at 1330, and we also noted that over the last 2 days, prior 2 days, I should say, that doesn't include today, we had this particular low hold, although it certainly did not hold today. As you can see, this low came definitively into that area, hitting that low at around 1320. Now, what does that mean? Well, first of all, let's talk about the actual recommendation that I put out yesterday, saying that we needed one more factor filled, because there's everything that really on a technical basis we needed to see before issuing a buy, except follow-through. Follow-through is critically essential, especially on this 2-day pattern, a piercing line. Consider it this way. This pattern itself, if the candle, this green candle, had been larger, let me try to kind of fill that in the way to illustrate that point. But if this candle had been larger, let's say this size, then instead of getting a piercing line, what you actually get would be an engulfing bullish. You would still wait for confirmation, but this, in terms of a 2-day pattern, is much stronger than a piercing line. The only buy signal 2-day pattern that is weaker than a piercing line is what's called a bullish harami. The best example I can show you would be this. A bullish harami is a star-like candle, a very small-bodied candle, pretty much in the center of the red candle, and it needs, of course, the requirement of follow-through, meaning higher highs, green candles following that. But as you can see, there are different degrees in terms of these 2-day key reversal bullish patterns that we look for. All of them, however, require confirming candles. We didn't get that, therefore a trigger wasn't pulled. So now we have to determine what is next. Now, what we're going to definitely need to do over the next couple of days is to determine if this market is going to find stability and actually find support in the area of around 1330. If that happens, if that's how this market unfolds, we will look for other indicators that are telling us that we're getting that bounce. First, we're getting the support we need to see, and then some sort of candlestick pattern that's giving us that key reversal trigger. If, in fact, the market cannot hold this particular price point, then we're going to go into a different mode. And the mode we're going to look at is going to say, we've had this market move up to a certain degree. It's still in a corrective fashion or manner because it hasn't been able to hold this support level at 38%, which would be a typical retracement. Where would the next logical level be? And that would have to be the 61% retracement. That comes in at around 1305. If you recall from the last couple of trading days, just prior to yesterday, I talked about the fact that we have to see if it holds here. If it holds here and bounces, that tells us one thing. If it cannot hold this price point, we also said this on yesterday's chart, it's probably headed to 1300. But traders, don't lose hope, because my sense is that will give us our buy trigger, and we'll be able to buy it a little bit cheaper and hopefully sell it a little bit higher. But those are the two scenarios we really want to see in terms of how they play out. First, Will gold prices have the ability to hold 1330? If so, we have a game plan. We know what we want to look for, and we know what triggers we want to see. If it cannot, we know that the next logical spot, I believe, on a technical basis to look for some kind of support in this market comes in right at around 1300. And that would be a point that we would look to see how the market reacts. I don't think we're going to see a correction deeper than that. And I still question whether or not we have given up hope on finding support here. I really want to see, because we had these lows come in, but we had the close of the market come in well above that particular price point. So technically, we're still showing some support, but we're certainly not seeing a key reversal. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.